the most recent significant rally or sell-off. We're looking for a combination of those three things. And that's where a lot of the objectivity comes in for Fibonacci. So would I call that smaller Fibonacci move the most recent? Yes. Is it the most significant? Probably not. Is it a rally or sell-off? Yes. So what qualifies as all three? I'd say this move right here versus a smaller move we saw here. Okay, so what qualifies the best for these three criteria? I'd say this larger move. Okay, it's not always going to be the larger move, but more often than not, it typically will be. By the way, psychologically speaking, larger moves are probably more well followed than smaller moves, shorter moves. Okay? All right, so that is what we're seeing right now on the 30-minute dollar Canada versus the daily chart of the dollar Canada. And since they're both moves that went lower, we're looking at the potential for the different resistance levels. Now, one thing you might notice, the 15-minute chart is in a little bit more of an uptrend. What if this high back here is the sum total of the trend? What if that's it? This high right here. Can I draw a Fibonacci? Like this. I could. I could also draw a Fibonacci from, say, this low right here. Okay, notice that prices have been bouncing off at 23.6. This visual confirmation is really important. You look to see if prices have reacted at this level before, thereby confirming that you're probably looking at a decision level. Yes? There's been buying and selling activity there before. It's a pretty good clue that you might be looking at a fairly significant level. Okay? So if that is the top and I'm looking for different support levels, in this case, that small uptrend is projecting what? Downside support. The Fibonacci is no longer valid when, in the case of a downtrend, there's a new low, okay? Or in the case of an uptrend, there's a new high. All right. Now, Fibonacci itself is not necessarily going to set up a trade for you. It's going to confirm the importance or identify important decision levels. It could be assisting you with stop loss placement. It could be assisting you with profit target placement. It's just here to identify support and resistance. What you choose to do at those support and resistance levels is going to depend upon what you're looking for. Are you looking for a stop loss? Are you looking for a profit target? Are you looking for confirmation of an entry? Again, these are just support and resistance levels. All right? All right, let's move on to another. By the way, anybody have any questions pertaining to the examples we're looking at here? I'm going to try to make my way down the questions I see here on the chat window. So I got a question here regarding the dollar yen. So let's head on over there. So the dollar yen, let's go to the daily chart. The dollar yen is left behind a low, right? Now the dollar yen's a little bit tricky because one of the elements of Fibonacci is to find a level, a move, the most recent significant rally or sell-off that has not already been retraced. So when you see a move like this, a lot of people will, I think, erroneously simply draw Fibonacci from here down to here, from the top to the bottom, from this top to this bottom. Well, in between that, we've had lots of little moves, haven't we? That I think all could have been Fibonacci retracements on their own. So if I'm going to draw a Fibo in this daily chart of the dollar yen, that's pretty much the one I'm going to draw right there. Of all this movement lower, this to me is the current Fibo, that small last major move. By the way, are prices confirming the significance of this? Yeah, I mean, take a look at the last few candles, how they're kind of sandwiched in between the 382 and the 23.6. In this case, if prices make a new low, it will invalidate this as a last major move. Okay? Remember, we're looking for the most significant rally or sell-off. In a rally, if we make a new high, that's no longer necessarily the last major move. We've kind of started another one, or we've not completed the one that we're looking at right now. In this case, with a sell-off, if I make a brand new low, that 100% to zero is no longer a valid last major move. We've made a brand new low. We're either continuing the current negative sentiment or starting a brand new leg down. Either way, if I make a new low here, this Fibonacci is no longer valid. Okay? So that is what we're looking to keep an eye on. No new lows in the downtrend, no new highs in an uptrend. Because it basically invalidates the 2 points from which we've determined there was a sell-off or a rally. And again, remember, Fibonacci presupposes a reversal. So it's basically assuming that this is the low for now. And from here, prices will rally, and these are the projected resistance levels. Now, you can use a Fibonacci on any time frame. I'm going to jump around time frames here. You know, we've used a 30-minute, we've used a daily chart. I will tell you, keep something in mind. This is basically the logistics of using a very subjective tool. And the logistics are these. Given a shorter amount of time between new candles, the shorter the time frame, the more analysis intensive it's going to be. So for very short time frames, like for example the 5-minute, even the 15 to a certain degree, you're going to have to be much more vigilant about the new highs, the new lows, last major moves, and so forth. So can you use this on even a 1-minute chart? No, absolutely. Do I recommend it? Probably not. You've got to basically assess how fast, how quick, and how often you're going to be looking at certain time frames so you can keep up with any changes in the last major move. Okay, so if you're learning Fibonacci, longer time frames are probably going to be easier because you're still working your way around how to put this study on your chart, and that takes time. Time is not a luxury that you have on short-term time frames. So keep that in mind. That's for any analysis. This is not simply for the Fibonacci. This is for any analysis, chart pattern analysis, whatever. You know, the newer you are at it, the more difficult it's going to be to apply it to a short-term time frame because there's just more data that you're going to have to contend with. It's just more things that are changing and fluctuating on that short-term time frame. Okay. As far as the 34 EMA wave, absolutely. 34 is a Fibonacci number, and that's part of the process that I was going through testing the validity of Fibonacci-based moving averages. That's absolutely correct.